So you want to buy a home or refinance your existing loan, and then you come across the infamous closing costs. You didn't know about it. Why are they so high? Well, let's talk about it a little bit. Buying a home or refinance your existing loan should not be a stressful experience. I'm going to also talk about the escrow account, which is very important and is something very good for you. So you receive a loan estimate, and it has over 20 lines with all type of fees and amounts that you don't know and you don't understand. All you know is it's a lot of money. You didn't know about that. You didn't know that you have to pay closing costs in addition to down payment. All transactions have closing costs. Most of the time, the buyer pays a lot of them, but you can also negotiate with the sellers. That's why you need a good realtor on your side. But at the end of the day, closing costs only are divided in two, and you can see all of them in one sheet. First section is loan cost, second section is other costs, and that's it. But first of all, divide all those weird lines and fees and costs in these two sections: loan cost and other cost. Loan costs are important for you to know because this is what you're paying to get the loan. And this is important for you not only to know how much you are paying because of the loan, but also because you are going to see what are you paying to the bank or lender related to your interest rate. Someone comes to you and gives you an amazing interest rate. You want to take a look at this box A, because in a lot of cases, the best or lowest interest rates are linked to higher fees on this box. So don't take a look only at the interest rate, but together with this loan cost in boxes A and B. Don't hurry to go with the lowest interest rate if you haven't seen the loan cost, because usually they're going to be higher. If you are comfortable enough to pay those higher costs, you may be willing to pay that for a lower rate, but you may not, and you need to know in order for you to decide if you really want a lower interest rate upfront. Now, be very careful with this. Be very mindful that if you are comparing two different loan estimates, the persons or banks or lender who prepared those estimates for you have the same information. Because if you spoke to one and that person or bank assume that you're buying a primary, while in reality you're buying an investment property, I can almost guarantee you that the person giving you the estimate for an investment property, it's going to be more expensive for you than a primary. Why is that? Because they're not the same. It's very important for you to compare apples to apples. If you're buying an investment property and you get a quote for a primary, that is called mortgage fraud. And yes, it's not legal. You shouldn't do that. Now, some lenders or persons could quote you for a primary knowing that it's going to be better than the investment property quote. So make sure that you are comparing apples to apples. I've done this myself, for my personal real estate purchases. And in a lot of times, after putting together all the fees that I received from two different banks and two different lenders, they look very different at first. But after I put everything together, like in a blender, they are the same at the end of the day. So it's very important for you to know this. My recommendation would be for you to go with the person or bank that you feel more comfortable with. Don't rush and go immediately with the lower rate or with the lower closing cost. You have to do a deep analysis, and most of all, go to the one that you trust the most. The second part of the loan estimate, and remember, it's only two. We're done. It's only two and we're done. The second part is other costs. Section E, taxes and government fees. This is for the government. So if two persons are giving you different estimates, don't even look at them. It is what it is. So If one of these is higher, if one of the estimates, don't worry about it. Section F, prepaids, very important. This is money that you pay ahead. It's like a saving for the future. So if one of them is higher, you shouldn't either be worried about it. First of all, because it's also an estimate, but these are very black and white numbers, so don't worry much about this, I would say. Also, the property taxes is very straightforward with it. So if one of the quotes is higher than the other, and if you pay money in excess for any reason, you're gonna get it back. I just received yesterday one check for one of my properties for almost $1,000 that I'm getting back. And it happened that I paid too much, so I'm getting that money back, which is fine. So don't worry about higher prepaid amounts, because again, it is what it is. It's really hard to get into a bad deal based off prepaids. The homeowner's insurance premium is normally paid 1 year in advance with whoever you want, regardless of the bank or the lender that you use. You can pick it. If a certain lender gives you a specific insurance company, you don't have to go with that. This is something you have the right to pick yourself, and you are going to pay this to the insurance company that you want to go with. This is the same with box G, initial escrow payment at closing. What is an escrow? Similar to prepaid, is an initial balance that you're paying at closing for the future. It's not money that you are throwing away at closing. You are going to get that money back. So prepaids as part of closing cost and escrow money as part of closing cost is good. It's going to put you in a better position for the next year. So don't be afraid of these two parts from your loan estimate, F&G from your closing cost, because these are good. This is money that you are going to use in the future. So if you have a closing cost of, let's say, $20,000 and $5,000 or $6,000 are prepaids and escrow, that's good. Because out of those 20, you are putting 5 in a savings account. We all want to save. So you're gonna spend a little bit more today, but you're gonna save next year. So bottom line, don't be afraid of the closing cost. Ask, always ask. And second, if you have two separate estimates, be mindful. The two lenders have the same information from you, and they're understanding the same, and they are offering you the same loan. If they are not, the loan estimates will be very different. In general terms, they don't make more money if you do this and that. This is the bottom line. Don't be afraid to ask. If you don't trust that person enough to ask more questions, maybe you shouldn't be there to begin with. This is the most important piece of information today. You have to trust the person that you are working with. If for any reason you don't trust them enough, or you feel shy to ask them, you can ask me in the comments. If you have a particular scenario that you want me to explain a little bit in general or to you, ask me in the comments. I'm here for you to help. It has to be a joy, has to be a great moment of your life. It doesn't have to be stressful. You are buying a home for your family. You're making an investment. You have to enjoy the process.